Oil hit $135. While the mainstream media calls this a market fluctuation, I call it the final alarm bell for the US dollar. The system is leaking, and for the first time in history, the elite aren't just watching their exiting. They know that when energy prices skyrocket, the paper in your wallet becomes nothing more than expensive kindling. But here's what they aren't telling you on the news. There is one specific asset they are quietly vacuuming up to survive the crash. And it's not what you think today. I'm showing you exactly what it is, before the exit door slams shut for good. Oil just crossed $135 a barrel. And most people think it's just another energy crisis. The behind the scenes, something much bigger and far more dangerous is unfolding. While the world panics at the gas pump, the financial elite are quietly shifting their wealth into one specific asset. History suggests they may know something the public doesn't, and today, I'm going to show you exactly what's happening beneath the surface of the global economy. Oil prices rarely move this fast without a deeper cause. At $135 a barrel, we're not just talking about expensive gasoline. We're talking about a systemic economic shockwave. Every truck delivering food, every airplane flying cargo, every factory producing goods depends on energy. When oil spikes, the entire global supply chain feels it instantly. Transportation costs explode, food prices surge, manufacturing slows, and inflation, the silent thief of wealth, returns with brutal force. But here's where things get even more interesting. The real crisis isn't the oil itself, it's how governments respond to it. History shows that oil shocks don't just hurt economies, they devastate currencies. In the 1970s oil crisis, energy prices surged almost overnight. Inflation exploded across the United States. The purchasing power of the dollar collapsed dramatically. Millions of Americans woke up to discover their savings was suddenly worth far less than they imagined. Why? Because when energy costs rise quickly, governments panic. And the most powerful tool is the printing press. More stimulus, more debt, more money creation. And every time new money floods the system, the value of existing dollars quietly erodes. That's when the real danger begins for anyone holding nothing but paper. While the public worries about gasoline prices, the wealthy focus on something else entirely: preservation of wealth. Because experienced investors understand the simple truth. During currency instability, money doesn't disappear, it moves. It flows out of weak assets and into strong ones. The wealthy aren't trying to get rich during these periods, they're trying to survive them. Think of it like an approaching storm. Most people are still arguing about the weather. The elite are already building it up. For over 5,000 years, there has been one asset that civilizations return to during monetary chaos. Gold, not because it's trendy, but because it solves a fundamental problem. It cannot be printed by politicians. It cannot be created out of thin air by central banks, and it carries zero counterparty risk. In recent years, central banks across the world have been quietly accumulating massive gold reserves. Governments from Asia, the Middle East, and Eastern Europe are diversifying away from dollar-based reserves. They're preparing for a financial world that may look very different from the one we know today. Gold doesn't move because of hype. It moves because of fear. More specifically, fear that paper money is losing credibility. Every monetary system ultimately runs on trust. The moment the trust begins to crack, capital rushes toward assets that cannot be diluted. That's why during major financial crises, from the Great Depression to the 2008 financial meltdown, gold didn't just hold its value. It surged dramatically, because when the world questions the future of currency, investors begin searching for something older than governments themselves. The US dollar remains the world's dominant reserve currency. For now, but history reminds us that no monetary empire lasts forever. The British pound once ruled global finance. Before that, the Dutch guilder. Before that, Spanish silver. Each system eventually faced the same pressures. Too much debt, too much money creation, and rising geopolitical instability. Today, the United States carries over $38 trillion in national debt. Energy markets are becoming increasingly volatile. And the global financial system is more interconnected and fragile than ever before. Oil at $135 may not be the crisis itself, but it could be the spark that reveals just how brittle the system has become. History teaches one consistent lesson. The biggest financial shocks really happen loudly. They happen quietly, gradually, and then suddenly. Long before the average person realizes the game has changed. Oil at $135 might just be the first warning shot. The real question is not whether the system will face another shock. The real question is, will you see it coming before everyone else does?